Ever thought about making your money work for you instead of the other way around? Picture your wealth accumulating gradually over time, all on its own. That's the potential of investing. It can feel like filled with intricacies, but don't worry. It can be distilled down to 6 fundamental principles, akin to markers pointing you towards financial prosperity. These principles act as the bedrock of successful investing. Today, we're going to unravel the 6 key principles of investing that can help you do just that. Ready to dive into the world of investing? Let's get started. The first principle of investing is to start early. Picture this: you're planting a seed. The sooner you plant it, the more time it has to grow, right? Now apply that to your money. Investing early gives your money more time to multiply through the magic of compounding. It's essentially earning returns on your returns. It's that simple. Every day you delay is potential growth lost, so don't wait for the right time. Remember, the earlier you start, the more time your money has to grow. Next up is the principle of diversification. Picture this. You wouldn't place all your eggs in one basket, would you? The same applies to investing. By spreading your investments across various asset classes, like stocks, bonds, and real estate, you're not only reducing risk, but also creating opportunities for greater returns. Think of it as a financial safety net, catching you when one market stumbles. Remember, a diversified portfolio can weather the ups and downs of the market. The third principle is to invest regularly. Picture this. You're on a journey, and each step you take is a regular investment. This is where the concept of dollar-cost averaging comes in. By investing a fixed amount regularly, you create a buffer against market volatility. It's like buying an umbrella before it rains, preparing you for any financial storms. This regular rhythm of investing can help to smooth out the highs and lows over time. Remember, consistency is key when it comes to investing. The fourth principle of investing is to stay informed. The financial landscape is a dynamic beast, constantly changing and evolving. Market trends and economic news can greatly influence your investment decisions. It's like sailing a ship. You need to know the weather and sea conditions to navigate effectively. So read up, tune in, and keep yourself updated with the latest financial news and market trends. It's not just about making informed decisions, but also about spotting opportunities and mitigating risks. Knowledge is power in the world of investing. The fifth principle is patience. In the world of investing, patience isn't just a virtue, it's a necessity. It's about having a long-term perspective, understanding that wealth isn't built overnight. It's built over years, even decades, of consistent and smart investing. You see, the market is like a roller coaster. It has its ups and downs, but reacting to these short-term fluctuations, well, that's like trying to predict the weather. It's near impossible and often leads to hasty decisions that can derail your investment journey. Instead, think of investing like planting a tree. You don't just plant a seed and expect it to become a towering tree the next day. It takes time, nurturing, and yes, a whole lot of patience. Remember, your investments need time to grow and compound. So whether the markets are soaring or plummeting, hold steady. Keep your eyes on the horizon, and remember, investing is a marathon, not a sprint. The final principle is to seek professional advice. This might sound a bit daunting, especially for those just starting out on their investment journey. But let's break it down. Financial advisors or investment professionals can provide personalized advice based on your financial goals and risk tolerance. They anchor their advice on years of experience and extensive knowledge of the market, a treasure trove you can tap into. Think of them as your financial GPS, guiding you through the winding roads of the investment world. Consulting with professionals can help you avoid common pitfalls, maximize your returns, and, most importantly, save you time. After all, time is a precious resource we can't afford to waste. Remember, investing is not a one-size-fits-all journey. It's tailored to your needs, your goals, and your risk appetite. That's where a good advisor comes in. A good advisor can help navigate the complexities of the investment world. So there you have it, the 6 key principles of investing. Like a melody, these principles harmonize to create a symphony of financial success. Starting early, diversifying your portfolio, and investing regularly set the rhythm. Staying informed and being patient add depth and richness. And finally, the crescendo. Seeking professional advice fine-tunes your investment journey. These principles are your guide, your compass in the exciting world of investing. Remember, investing doesn't have to be complicated. Stick to these principles, and you'll be on your way to financial success. And that's it, the 6 key principles of investing. Remember, investing doesn't have to be complicated. Stick to these principles and you'll be on your way to financial success. If you found this video helpful, don't forget to like, subscribe, and share it with your friends. Your support helps us to continue providing you with valuable content like this. Interested in more investing tips and tricks? We've got plenty more to share. Stay tuned for our upcoming videos where we delve deeper into each principle, providing you with practical advice and real-life examples. Until next time, happy investing.